Hello, good evening. You're welcome to my presentation today on the corporate finance project. My project is this discussion is going to center on this outline. I'm going to introduce to you the project, and I'm going to introduce the company that I worked on, the business summary for this company and the competitor, and then I'm going to discuss about the comprehensive financial analysis that I did. I'm going to show you the financial ratios, the accounting measures, and the performance trends that I saw from the analysis using time series and the cross-section analysis. And then we also did cost of capital computations, and finally there was some historical analysis of the company stock prices. Okay, by way of introduction, the company is Oracle Corporation. It's a publicly quoted company with the symbol of NORCL. It's a Fortune 500 company, incorporated in the United States in 1986 with corporate headquarters in Redwood, California. The business segment focus is the business area is internet and software, and it has a market capitalization of about 189 billion. Annual revenue exceeds 39 billion, as was seen in the last financial year 2018, with employee count of 139,000, over 430 customers in 175 countries across the globe. The major competitors are Apple, Microsoft, IBM, Intel Corporation, Hewlett-Packard, and all the rest of them. The business summary for this company is: number one, cloud software and on-premise services. The company, designs, generates softwares that is used to service different, categories of customers, and it provides cloud services, by way of infrastructures as a service, and also it does software licensing, updates, product support, and some educational programs as well. Also, Oracle is into hardware production. It produces some of its own hardware, and it provides also support, to the after-sales support to the products that it sells to its customers. And there's also the services business, that handles, related businesses or attends to related needs of its customers. So the competitor that I analyzed as a benchmark, to compare with this, with Oracle, is VMware. Is also in the same sector, internet and business, and internet and software. Was incorporated in the United States in 1998. Also, has corporate headquarters in Palo Alto, California. Market capitalization is a lot lower than Oracle, just 2 billion, and the annual revenue exceeds about 8 billion. Employee count is about 24,000, and it has, over 430 customers in about 175 countries. VMware, has primary business area of software defined data center. So it provides, the kind of services, the kind of softwares, the kind of programs that interfaces between the hardware and the software components, that comes from vendors of these customers. And also it provides hybrid cloud computing. So it offers services that enables different customers, to kind of like, customize, and choose the kind of cloud service that they need, and then provides end user computing, your desktop, your personal computing needs. It provides the interface, that enables you to do your operations seamlessly. So now I'm going to go into the comprehensive financial analysis. So in the comprehensive financial analysis, I focused on how to do the financial liquidity ratios. We have to compute the financial ratios. I did liquidity ratio analysis and computed efficiency ratios, leverage ratios, and a whole lot of other ratios that were generated. To do this, I had to go to online and, I went to Yahoo Finance, I went to some online resources, and I pulled the financial statements for the company for about for the past 5 years. And the analysis was done for the year 2014 to 2018. And then I have some, in the course of this, we computed some of these ratios, and then on the right side over here are some of the industrial averages, to compare with the result. For the case of, liquidity ratios, you can see the values, that we're getting there. Oracle, had between the year 2014 and 2018, they had some kind of like, a little bit of fluctuation in the current ratios of the company. As you can see, some little bit of, rise and fall, but generally on the average, it was between a value of 3.8, 3.9, thereabout, which is higher than the industrial average of 2.7. And the quick ratio, also for Oracle, is within the same zone, within the same range. It also did not exhibit a particular trend, whether of increasing or decreasing, just a little bit of fluctuation within this time frame. On the other hand, the competitor that I analyzed, which is VMware, showed a kind of a progressive increase in its current ratio from 2014 to 2018, and the quick ratio also exhibited the same pattern, of increase in value. But overall, the two companies have their quick ratios and the current ratios above the industrial average. So essentially, that's telling us that in terms of liquidity, they are in a position that they can be able to meet up with their current liabilities, and they have sufficient cash flow, that is enabling to sustain the operations and be able to meet up their daily needs. And then also, we have asset management ratios, the average collection period. In this case, I did not get an industrial average to compare, but we can see what the value is for Oracle and for VMware. Overall, Oracle seems to be doing better in terms of collecting its revenues from the customers compared to VMware. And on the inventory turnover, there was some lack of information on inventory information in the financial statement of VMware, so that could not be computed. I could not generate inventory turnover, and also I could not compute the quick ratio for VMware because of lack of inventory information in the financial statement. And also went ahead and did debt management ratios. In that, I calculated the debt ratio, the time interest, and then on the right side over here is you can see what the industrial average is. It's showing for debt ratio compared to what the figures are for Oracle and the competitor. In this, looking at it, you can see that within this, the figure for Oracle is pretty much within the ballpark of the industrial average. Also, the same thing with VMware. And then there is progressive, marginal increase in the debt ratio from 2014 to 2018. The same thing, we see the same pattern for VMware as well. And also the time interest and, also which is also, one of the ratios that are computed under, debt management. Then down to profitability ratios, I computed the total profit margin, computed the operating profit margin and the net profit margin. So you could be able to see how the company is doing in, how much it's able to generate, how much income it's able to generate from his assets. Comparing that to the industrial average, you could see that for Oracle, the figure is pretty much within is higher than the industrial average of 3.6%. And for operating profit margin, their figure is somehow lower. It's significantly lower than the industrial average. So, which means there's a whole lot of room for them to optimize their profitability. And then I also computed, cost of capital for the companies, and these are the statistics for that. And then we're going to, beside that, I did computation of accounting measures. And these are the figures that we generated from the accounting measures. I did not have, industrial averages to compare with this, but we could see, using the tax rate that is indicated above here, you can see the net operating working capital, what the figures are. You can see the net, investment in operating capital and the general investment in operating capital. Now I try to do a graphical, illustrate, analyze one of these parameters, graphically. And so I started to plot the total net operating capital for VMware and for Oracle. You can see what the trend is like. There was wide variation in the total net operating capital for Oracle, but for VMware, there's a marginal, consistent marginal increase, from 2014 to 2018. Why the Oracle graph is this way? To be honest, I don't understand. It doesn't look reasonable to me. Probably somehow I used the wrong figure for that, or I don't know. But this is what I get. So you can see graphically how this, the main target company, Oracle, compares with the competitor. And then also looking at the net operating profit after tax, NOPAT, you can see the blue is Oracle and the orange is VMware. Now there's a steady, slow decline, of the net of NOPAT until, and they bottomed out around 2016, and after that it started picking up in 2017, and it grew, quite significantly rapidly, in 2018, as was reflected in this past year. But for the competitor, the NOPAT grew, slowly and steadily, and then began to decline in 2016, and then bottomed out in 2017, but then grew rapidly again, in 2018. And the reason for this could be probably traced to the market reset that took place around 2017, where the companies, experienced huge losses in the business because of the market risk. So the next thing that we did after that, is computation of the cost of capital. Okay, and this is the statistics that I have from the cost of capital that I computed. Okay, this is the accounting measures that I showed earlier. And then this is the cost of capital that was computed. Now, for VMware, there was no information from the financial statement on their dividend. Also, there was no information on inventory. So these information, the lack of the information made it, difficult for me to be able to generate their cost of capital. I couldn't, compute the weighted average cost of capital of JCC, and so I could not, go ahead to generate any of these, statistics, to be able to analyze and see what the cost of capital outlay for the competitor in question here, the benchmark competitor VMware. But for Oracle, these are what the statistics is showing. Between 2014 and 2018, the dividend growth rate, kind of like grew, kind of declined, from 2014 to 2018. And the cost of capital, for Oracle, within that same period, the percentage rate was kind of like, you could see what the values are. There wasn't, there wasn't dramatic change, from year to year, within this period. And then the cost of that, sort of grew consistently from from 2014 to 2018. Probably give you an indication that the company needs to do much more better, in that way, to be able to lower how much they're spending, to service the debt. Okay, and then the next thing we did after, after generating the financial ratios, after computing the cost of capital, and after generating the financial measures, is at the historical analysis, on the stock. So here, I went to Yahoo Finance, and I got these numbers. I got the end, year-end prices, top prices for Oracle and for VMware for 2 years, 2017 and 2018. And then I had the industrial averages, S&P 500 and the Dow Jones. It was just out of curiosity, that I decided to include the Dow Jones, but I got the S&P 500, and you can see what the time series analysis on these, parameters, on these, indices are. This is this shows the performance of Oracle within the time period for these past 2 years, 2017 more or less, it was just fluctuating, hovering between, around $50, between $40 and $50, pretty much. And then for VMware, it was varied, a bit more widely, between $25, so to say, down to about $150. So the stock price for VMware changed within this time period much, widely than that of Oracle. And then you can see in 20 sometime, after the steady rise of the stock, there was a sharp decline here, which is exhibited also by both the two industrial, the averages of S&P 500 and the Dow Jones. So you can see here how the two stocks performed within these 2 years and what the industrial averages are telling us, for within the same time period. But then we're seeing that the performance is consistent with what the industrial averages are telling us. And then also, we did a regression analysis, for both the main company, Oracle, and the competitor. And we can see here, the intercept, is 1130, and then these are the slopes, for slope for Oracle and the slope for VMware. And then you can, from there, we generated the regression equation, which tells us, that for any given value of y, this is what, for any given value of x, this is what the y value is going to be. This is, you can predict, the cost, the price of the stock for Oracle using this equation, and also the same for VMware using this equation. Okay, one other, thing, something that I needed to point out is when it comes to the profitability ratios, for these companies, you can see that given the movement in the stock prices, the rate of profitability that our main competitor, our main company, Oracle, displayed, as this statistic showed, is much, smaller compared to the competitor, VMware. Then you can also see the market value ratios, what the result, gave to us, including the efficiency ratios. And then there are some other ratios, that we consider as well. So including the cash flow per share, the dividend payout, and the dividend yield ratios. So, in a nutshell, given the historical stock analysis, of these companies, we can see that Oracle, for some reason, they didn't, they didn't record such huge, change in the stock prices, and for some reason their profitability was very much fluctuating within this period, and probably it has to do with, the kind of client base that they have. We know what happened in the oil and gas industry. So if probably the majority of the clients, were within that industry, and they had to downsize, the operations, probably that, affected the bottom line. But then on the other hand, VMware recorded, much higher margin of, profit relatively, compared to Oracle. But then, of course, we know that the capital base of, Oracle is much bigger than that of VMware, and where probably this is one of the seasons in their time, when they need to do some, adjustment. The market is not so well for them, and we're hoping that, from this result, they're probably doing some adjustments, and hopefully in no distant time they'll be able to, their stock will be able to perform better. And so that is the result of my analysis today, and I thank you for listening.